Record button on. Disclaimer on the screen. Okay, all right, here we go. Audio visual good. I think we're ready to start. Let's get our disclaimer out of the way and see if we can actually kick this puppy off. Here we go. Good morning, everybody. This is the Saturday morning Viper trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are in the right place. We have a little unusual situation here where we've had to log in remotely to the PC. So I'm actually conducting this on my laptop, but we're going to do our best to get through it today. Hopefully the AV will be okay. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here today does know that you do trade at your own sole discretion. Alrighty then, that is out of the way. We are going to go to a chart now, and I am showing gold futures, GC. Does everybody see a gold chart? GC, 4 range, cursor moving in the middle of it. Yes, coming through, loud and clear, audio visual good. Chart up. Excellent. Bonjour, my friend. Welcome, Walter. Welcome, everybody. My apologies for the delay. Had some technical problems, but we managed to work through it. Let's get on with the webinar. Okay. Now, some of you are visiting, and if you are new, welcome to you. What you are looking at here is we're connected to the data source. Our broker is NinjaTrader, and we're on it in this data feed. We're getting lots of different futures instruments. The ones we trade in the live room, of course, are crude oil. We'll look at a crude chart today, CL. We used to have ES. A lot of you trade the E-mini S&P futures. Gold, we're looking at right now, GC, gold futures. These are the micros, the M's, micro versions of the equities. Some of you trade NASDAQ and Q futures. Russell we have in the room, RTY. We'll look at a Russell chart this morning. And, of course, YM, the E-mini Dow futures. 4 range charts is what we trade. The indicators are as follows. The background colors, the bar colors, blue, yellow, and red. The predictors, which are the oval real-time swing levels. Toggle them on and off like such. We have the alerts, of course. We'll look at those in a little bit too. You can toggle those on and off depending on what trend you're in. You can look at mid-band longs, etc. Mid-band shorts. We're going to talk about shorts today and trail stops. And of course, the most prominent thing on here, most of you can see, obviously, is the bands and the mid-band. So we have 4 bands below this thick line, which is called the middle band or mid-band, right here. 1, 2, 3, 4. The skinny red line on top of band 2 is called line 2, and it features prominently in our trading. And then we have bands 5, 6, 7, 8. 8 being the outermost band here. And the thin green line on top of band 6 is called line 6. Now, one of the most important things that we teach and trade ourselves are what we call mid-band trades. And let me blow this chart up and explain exactly what a mid-band trade is. And we're going to look at both long and short. I'm not going to spend a lot of time on the long mid-band because I did that about a week ago on Thursday night. In fact, if you haven't watched that one, that's a great webinar if you're looking for good training on long mid-band trades. But I'll just show a couple right here because they're easy to show. Here's a good example of one right here. Now, when we say mid-band trades, we really prefer to take trades at or around the mid-band when a market is in a trend and the trend is clear. So, for instance, here on gold, you can see that in this particular case, I believe this was Friday morning, we were in a very clear uptrend from about 8 o'clock in the morning all the way almost to the close. Characteristics of an uptrend are higher highs, higher lows. Mid-band and all the bands are stair-stepping up, predominantly blue bars. And we are what we call retracement traders. So now that we know the trend, and the trend is clear, green background, right? We patiently wait for retracements, and I'll show a few of them right now. First one I want to show is right here. Now, almost every time in the case of trend up or a trend down, the first thing that happens is what we call the initial thrust. Now, sometimes the thrust can be small, sometimes it can be large. Here's the example of the uptrend first thrust. Now, it is possible to catch that leg of a trend move. You would have to have, oops, this keeps not going here, what I wanted to do. There we go. Okay, let me come back here just for a second. For instance, if you look to the left, we were very clearly coming off a downtrend, and I'll show that. I'll speak to that in a second. But notice how it comes back to the mid-band right here, and you had an opportunity to put a mid-band box on it like such. And even if you didn't do that, you had a clear case where it poked up, and then it pulled back and rested directly on the mid-band itself, like such. Can you see that right there like that? And if you'd boxed like I've shown, then you can clearly see right here that you could be filled long on the close of that bar right there outside of the region box. For those of you that are new, we're using what's called an object trader tool. It's a semi-automated ninja strategy where you enable a region box, and when you get a close outside, up or down, you get filled with a market order long or short. So let me proceed. We wait for retracements. We are not thrust traders. We have to have what's called a pullback or a retracement, and you get that right here. Now, the definition of and like I said, I'm just going to speak for just a few minutes on the long side, and then we're going to talk about the short side of the market. The areas of location for long mid-band trades are as follows. Anywhere in the band directly above the mid-band here, directly below the mid-band here, or physically sitting right on the mid-band itself, like such. Anywhere in these rectangular zones are what we call a mid-band trade. And we strongly urge everyone learning this system and wanting to trade this would be a good first trade type to learn. So let me ask the question then for everybody that's in here, patiently working through my technical problems. It's a yes/no question, and I'll give you 5 seconds. Based on the definition that we have shown so far, are these three bars considered a mid-band trade, yes or no? Just type in a Y or an N. Are those 3 bars considered a mid-band trade, yes or no? 4 seconds left. Just type in a Y or an N. Do they meet the criteria of a definition for a mid-band trade? 3 seconds. 2 seconds. 1 second. Yes or no? 3 bars. Time's up. Yes. Notice how the candles just enter into the band directly above the mid-band right here. So by definition, those are mid-band trade bars. Yes. Now, let's look at another example. Here's a good example to the right. As the uptrend continues, you can see here that this is another thrust in the uptrend direction. You had a deep retracement here. I'm not going to speak to that right now. That's not what we're here to talk about. That's another trade type, deep retracement, or phantom we call it. But then we get another pullback, and these bars sit right on the mid-band itself, perfectly, just like this. So it goes without saying, and it's obvious, so I'm not going to ask the question, that by definition, these are all the bars qualify as a mid-band trade because they are actually sitting physically right on the mid-band itself. So in this case here, if you would engulf those bars as I have shown, or even put a limit order here or a market order, however you got into the trade, you were filled long on the close of this bar right here. Now, what we like to do is, if you can, on almost every instrument that we show and teach and trade, is that if you can put 2 contracts on, that is ideal. Because what we like to do is, let me explain how this works on, or should work on, almost every trade. So you have a 2-lot trade on, and you're filled long on market order on, close that bar right there. So you're in the market long on gold. In the room a lot, you're going to hear comments to the effect of, okay, take your scalp off. Anybody have any idea what we're talking about? Go ahead, you got your scalpy. Right, you hear that all the time in the room, right? Okay, there's your scalp. What are we talking about? What is that? Scalp. That we like cut the top off a piece of fruit or something, or we cut a vegetable in half, or what is scalp? What are we talking about? Take your scalp off. What kind of comment is that? Is that even a trade? While you're pondering the answer to that question here, so you're filled on a market order long at 1522.80. Long, and close that bar with a 2-lot. Normally 12 ticks is our initial stop, so we take 12 ticks away, and that put us at 2160. $21.60 would be located here. So the beauty of using the Object Trader tool is that once the box is drawn, enabled, it takes over from there. And that's the semi-automatic. The only part you have to do is draw the box. The rest is taken care of by OT. So it actually it'll go ahead and put that initial stop for the 2-lot right here, 2160, 12 ticks below. Now, a scalp trade is simply that's an old trading term from years ago. I don't know if any of you remember this, going way back like 20 years, when stocks were priced in 16ths, not pennies like they are now. A scalp would be something where you went for scalping teenies. That's the actual term. That's where it actually started. It's back in the late 90s. Scalping teenies. And then you actually had a So's box, and what you would do is your fingers would move so fast, and you just try to get a couple teenies in on various stocks. Well, since then, that's been abbreviated and applied to different markets. And now what it is you want to go for a short-term gain of anywhere from as little as 4 or 5 ticks up to 10 or 12 ticks. So in the first burst of this trade moving in your favor, here, like such, you would want a short-term target. Now that's going to vary depending on the instrument you're trading. Like for instance, you would not put a scalp 12 ticks on ES. 12 ticks is a big move for ES. That might be your entire move, just 12 ticks. So in the case of ES, you might just want to get 3 or 4 ticks and then engage the runner. In this case here, you can see that you got filled here at 2280, and the peak of this burst was 2410, and what is that? 2280, 10, 12, 13 ticks, right? 13 ticks to the peak of this little burst. So a good rule of thumb is 8 to 10 ticks. So what physically happens in the market then is that Object Trader would put, or you could physically do it yourself if you had a limit order, 10 ticks above this entry level, you would put your first target. So in this case, it would be 2380 right here. Okay? So there's a limit order sitting in the market right here, placed by Object Trader or by you at 10 ticks above your physical entry. And once it hits it, it's done. And there's an OCO in there, and one cancels the other in the system, where automatically this initial 2-lot initial stop will go now to 1 lot, because 1's gone on the scalp, yes. And you could move this to within 2 or 3 ticks of your entry. Now you have what we call a free trade. Everybody knows what that is, free trade, free money, right? You just made 10 ticks here, and now you have a 2 or 3 tick stop here in case the market blows up on a tweet or something, right? So no matter what happens to the market, you make money on this trade. Everybody see that? Right? Even if it just tanked right through here for some unseen reason. Now, let's talk about trail stops. We rarely talk about trail stops, but once the scalp is taken out and you have your initial stop, you want to see a burst of movement in your favor again, which you get right here. Everybody see that? So the market's continuing to move in your favor, continuing to move in your favor. So now let me explain how the trail stops work. You can program Object Trader to do this automatically for you, or you can physically do it yourself when you're dealing with limit orders and placing your stops and targets yourself. Notice how when you get a stair stepping in the up direction following the trend, that the stealth line, the green sort of sneaky snake looking line here, and line 6, the thin green line on the top of band 6, follow the market up. Follow the market up. Follow the market up. As the market moves up, they move up with it. Now, many times in the live trading room, you will hear trail stops called. You'll hear things like tight trail stop. We've moved 40, 50, 60 ticks, whatever, which is a good move for any instrument, or 80 or 100 ticks. And we'll say tighten your stops up, no loose. What that means is, just to debunk any mystery about it, is that you would actually literally follow stealth or line 6, putting your stop on it, like such. However, in the beginning parts of a move of a trade, and this is a little bit art and part science, but it's important to play with your instrument in terms of how it retraces. Notice how you get, in the course of this move, a little bit of sort of micro pushes. You get a push up and a little pull back. See how it just wicks line 6 right here? You get a push up, and here it just comes right within a tick of line 6, see it? And it pushes out double top of this little swing here, and it comes back and just breaks it just by a couple of ticks. So in the case of tight stop, if you had trailed right on line 6 with your trail stop, one of these bars here would take you out, and you would miss this last beautiful push on the final leg of this trade up here like this. You would miss it. And that's significant because we're talking about going from, 2470, 2450-ish, all the way up here to 28. That's another 25 ticks. Now, it's $10 a tick on gold. You're missing 20, 25, almost 30 ticks, $250 of your trade you would leave on the table if you get stopped out with a too tight of a stop right here on line 6. So when we in the live room and we say something like lag your stop behind line 6 by 3 or 4 ticks, this is precisely why we say that on this condition right here. Because many times you'll get, and you only got one lot left here. Remember, we took our first lot off on the scalp right here, remember? And we had the 12 tick initial, came up to 2 ticks when we hit our scalp target right here. Remember, it was sitting here. We give it some wiggle room. We don't immediately get tight. You just really don't want to immediately get tight because you're going to get normally some kind of A, B, C here. A, B, C. The B pullback after the thrust, you get these micro pullbacks. They're going to find support right in here somewhere. And I'm telling you, I've seen this 1,000 times. If you jack that tight, get real tight on that initial stop and just get it right up there, you're going to get wicked out and miss these beautiful 50-tick moves. You really don't want to do that. So you keep it loose. That's how the trail stop management, keep it loose. Now, by the time you get up here to 28 and you got in way down here at 22, you've moved almost 60 ticks. Now you will hear things like, okay, look, we've moved like 60-something ticks here, okay? Tighten that stop up, no loose. Now what you want to do is crank that pup way right up here, right there. I mean, you could leave it a little bit looser, but you leave another 5 to 7 ticks on the table here on stealth, see it? After a 60-tick move on any instrument, you want to crank that pup up tight, real tight, like that. So that's when you hear in the room, no loose. Put it right on line 6, no loose. Or we might even call out a number like, okay, put it right there, 2710, right? Hard stop, 2710. All right, so that's the anatomy of a long trade. Any questions on that? That's the anatomy of a long trade. That's how you box it in. That's it's a perfect example of a mid-band trade long, how you're filled, where your initial stops go, where the target goes, how you be a little bit loose in the beginning in your trail, just a little bit loose, and then as it moves in your favor, you crank it up. This, depending on how and where you got in, this could be your one and done trade right here. You made 10 ticks on the scalp. That's $100 right out of the gate here, right? And you got in, what do we say, 22.80, and you get out at 27.10, 22. Let's use some round numbers here, 22, 23.40. I don't know, 42 ticks, 43 ticks, something like that, which is another 400. So $530. Let's just say between 5 and 550 less commission. This is a perfect example of a one and done trade if you manage it properly. All right, I don't see any questions. Let's get over and take a look at the short side here on gold, because I believe there was a, oh lordy Lord help me. Hold on one second. It's really weird trying to do this thing remotely, I got to tell you. Oh my goodness, I have to fix myself over here with my other thing. My mouse is running away from me here a little bit. By the way, I'm going to test this pause button here. Do you see the screen moving? Yes or no? I'm moving the screen, but tell me if you see it moving. I'm moving the chart. You don't see it moving. It's stationary, correct? Is it stationary? Yes? It's stationary. Okay, good. Good. So my pause button is working. Remotely. As weird as that is. Oh, it's running away from me here. Lord help me. This thing's driving me nuts. It's doing okay, Brian? Okay, good. I'm kind of oh, man, this is a challenge. Yeah, we'll get through it. Hey, you got to stay positive on Saturday morning, right? Can't get all negative or anything like that. All right. And we're going to do a pop quiz on a short trade. I'm going to help you, and I'm going to say, all right, I'm just going to tell you it's a short trade. But I'm going to advance the gold chart, and when you think you see a mid-band short setup, you simply type in the letter S. Boop, just like that. Looking for shorts, and this is going to be 7:30 on Friday morning. Are you ready? Oh, don't do this to me again. You're driving me nuts. Stand by. Okay, trying to get the chart oriented correctly. 7:38 on Friday morning, and we're all going to look for shorts together. So when you think you see one, I'm advanced. I'm recreating real time from Friday morning. And when you think you see that mid-band short, you type in the letter S. Here we go. Okay, there's 7:40. Looking for mid-band shorts on gold. 7:40 a.m. Pacific. 7:42. Looking for shorts on gold. Mid-band shorts. 7:45. Believe the room's still open at this point. Live trading room. 7:47. There's 7:48 a.m. Pacific on gold on Friday morning. Get the bars a little bit bigger for you there. Kind of small. Blow them up a little bit for you. Okay. All right. 7:48. Now there's 7:50. Room's almost closing. Coming up on 8 o'clock. There's 7:51. The bar is nice and super big here. Okay, there's 7:53, 7:54 a.m. Pacific on a beautiful Friday morning. 7:55. And here we're coming up on 8 o'clock. Okay, good. All right, many kudos to everybody in here this morning. I think you're getting it. Great. Now, let's talk about this. You can obviously see that there's a very powerful down push. These are sell programs kicking in on gold right here, pushing it lower. And you see how the sell programs and buy programs, only in the other direction, obviously, you get heavy selling come in. And then with these little micro retracements, this is just a little bit of short covering causes this, right? Excuse me, another micro push. A little bit of short covering, et cetera. Rinse, repeat the whole way down. At some point, the sell programs reach some sort of equilibrium, consensus on cover, whatever you want to call it, and you get the deeper retracements here. That's why those occur. The sell programs are covering. Okay, so everybody knows this, but if you're new and visiting, you may not be familiar with this, but you know that 75, 80, as much as 85+% of trading in all markets, including stock, forex, Bitcoin and futures are driven by algos. These are computer programs run by the big banks, market participants. Lots of people run scripts, right? And at some point, after a large move up or down, in the case of the short, you get what's called short covering. These are not buy programs. These are sell programs that are taking profit and covering their shorts. So what we're doing, we're like one of those little mammal things that rides on the big whale. So you got the big whale, big honking whale in the ocean swimming around the big whale, and then there's all kind of little things connected on riding with the whale. So that's what we are. They're the whale, we're the little things in the whale. So in order to do well, we got to know what the whale's doing. In this case, the whale was swimming south, downtrend, red background, bars, lower lows, lower highs, mid-band, all the bands there stepping down. We know we're looking for shorts. We're looking for retracements. Now, notice what happens right here. With these yellow bars, they come and they wick right in the band underneath the mid-band, and just slightly the wick of this candle just almost sort of kisses the mid-band itself. This is a beautiful mid-band short trade. And almost all you got it typing in S's as those bars formed, and I'm really happy and impressed to see that, because a lot of time I do these exercises, and I try to show a good mid-band trade, and some traders have struggled to see it. But once these bars enter this area right here, remember our definition in a downtrend is very much like an uptrend in terms that it's the band above and below or directly on the mid-band itself. So by definition, of course, you can see those bars enter this zone right here to take the short, yes? See it? Or in some cases, and we'll go find these, okay, where they'll sit right on the mid-band itself, right there, just like that. These don't do that. Now, if you follow the protocol that we described earlier with the scalp trade, you may or may not have gotten this off. So I'm going to explain how this trade could have worked in a couple of different ways. In the case of the first short here, if you'd used the box, you're filled short here, and I don't know whether you got a scalp off or not. It's hard to say. If your scalp was like 10 or 12 ticks, you probably didn't. If you had a tighter, here, let's look at the numbers real quick here. See if we can figure how much that initial push actually got you. So you're filled short here at 1870, and the wick of this bar got you down to 10 ticks. Okay, you're right at, well, actually the move was closer to 11 or 12 ticks. So it looks like quite possibly you did get your scalp, initial scalp target was taken out right on the candle right there. Now, if you follow the protocol we discussed from the long side of the trade, you got your stop. Let me take this cursor off. It's driving me nuts. With the push right there. And then your initial 2-lot stop was 12 ticks above. So I'm just going to stick it up here. I'm not going to measure it. I'm just going to just represent where it would have been approximately. And then you got 1 lot off. So you got a 1-lot stop left, yes? And you come within, I don't know, 2 or 3 ticks of your entry. And so as this market retraced for short trade entry number 2, which was right here, your initial stop movement to within 2 ticks of your entry was taken out on this bar right here. Can you see that? So this is a case where you would have got the target, stopped out, re-entered, and as you re-entered with a fresh new box or a limit order, you would have been filled again on second trade short entry right here on the close of that bar right there. Just like that. Almost exactly in the same place. Looks like within a tick or 2 of it. Now, in the case of the second short box, and many of you, in fact, several of you have typed in that there were 2 shorts. Brian did. Several of you did. And that is true. This is actually physically two different short entries, both mid-band. You follow the same protocol. Your initial stop is up here with the 2-lot. You get your scalpy off here, 10 ticks out of the box, right here, about the same place you got out on trade short trade number 1. And then now you engage the trail. Now, it's hard to say where you would have gotten stopped out on leg 2 of the second trade. You know, even if you went loose off of stealth and line 2, the thin red line here, as a trail stop, in all likelihood, somewhere in here, one of these bars got you. You know, could you have jumped back in on a rollover and caught another leg? Possibly. It's hard to say. But in all likelihood, the second leg of the second short here on gold would have looked more like this. Everybody see that? So total gold stars and kudos to everybody who got those. That was 2 actual mid-band shorts on gold. All right, now I'm going to try to shift to crude. And as I'm doing that, can I get a little consensus vote on other instruments for the rest of the webinar? Just type in what you would like to see. You know, whatever you trade. Maybe you're an ES trader. Maybe you like YM. Maybe you're, you know, crude trader. I'm going to go ahead and get crude up while you're typing in your instruments. Stand by. Loading crude. Whatever you like, type it in. And you know, I'm gonna go a little bit over here because I think I lost the first 5, 10, 15 minutes. So I'm gonna keep going beyond 10 o'clock this morning because of those technical issues we had. That's a lot of ES coming in. Crude and ES. Okay. All right. Crude and ES. Everybody likes crude and ES. All right. Well, let's get the crude going here then, and then we'll pop up an old ES chart. I love me some ES. You guys know that. You guys and gals, everybody here this morning. You know I just love ES. Tasty. Now, I really want to show crude here. Michael P. NASDAQ. A couple of NASDAQ traders in here. Okay. Now, crude is one of those instruments where, and many of these, most of you know, of course, if you're not familiar with crude oil, it's the CL, the crude oil futures. And let me see if I'm showing the chart. Stand by. Testing visual on the chart. Does everybody see a cursor moving in the middle of a crude oil chart right here? Yes? Just type in a Y if you see it. A cursor going in a circle on a CL chart. I'm telling you, this is really funky to do. Logged in my laptop, remotely doing a webinar from a PC that I'm literally sitting right next to. Never had to do that before. Okay. All right. Okay, cool. So anyway, crude has a pit open at 6 a.m. Pacific, 8 Central, 9 Eastern. And that's why Gary opens the live room at 5:55, because he wants to get in there at least 5 minutes before the pit open. So in this case here on Friday morning, the crude pit open was right here, and Gary opened the room 5 minutes before. So the chart would have looked something like this. You would have had bars sitting right here. Now, I wasn't there. I don't know. If you were there, let me know. Did he put a box around this? Or had it already moved? Did he get in there early enough to actually do a box and catch this short? I wasn't there. I didn't get there till like 6:15, 6:20, something after 6:20, I think. He did, Walter? Were you there? Yeah. See, if you're in early enough, and this is what I want to explain. And crude, this is one of the rare exceptions to our rule, our trend rule. Normally we do mid-band boxes, and what do we say? We got to have a trend, right? And we need to see the trend clearly, and we follow the big whale, up moves, down moves, etc. Now, the exception to that is crude around the pit open. So that's the first half an hour or so, first hour really on crude, when that pit opens, because all these orders come in. Sell orders are coming in, buy programs are kicking in, sell programs are kicking in. And you can move the market either way. You can get big swings. So that's what I want to show here. In the case of this initial box here, at the pit entry, you could enable both sides. In other words, if you drew a region box using the OT tool, at the time that this occurred, you did not know whether you were going to get a big move up. He called a trade right out of the box as the room opened. Okay, Akeem, thanks. And a move down. That's the thing about crude. If you trade crude, you know that. Now, In the case of this box drawn as I have shown it, in all likelihood, you would have been filled short on the close of either this bar or this bar. One of these two bars would have gotten you in out of the box, right here, like that. If you drawn it tight, would have been closed there, and a little bit looser would have been there. So I'm gonna call the fill in between there just to have something to measure by. And let's say that you were filled at 54.75. I'm not going to do the whole protocol, but you know how it works. Right? We got our scalp at 10 ticks, which would have been 65. I'm guessing that would have been somewhere right about there. So normally you were going to find just a comment on the scalp trades. If you measure most instruments, the distance between an outermost band, in the case of here, would be this swing at the outermost band. In fact, let's do it right now. 60, 61. Back to the midband itself, 85, is 20 ticks. This is normally 20 to 24 ticks between here and here, if you're ever wondering that. So if you give it some wiggle room to get filled, now you could have had a market order up here, and you could have actually put a limit order to here if you didn't use the box. But you notice that once you get filled off a midband, normally you're at least a quarter to a third of the way back down towards the swing here. So normally when you do scalp trades, and this is what I'm trying to get to, they're going to be somewhere at or around where that swing is located at the bottom of the box. In the case of the short, that would be under line 2 at band 1. Right there, see it? You want the markets to return to the outermost swings. In the case of the long, that would be the top of band 8 up here. And we looked at longs, remember? I go for a faster scalp myself. I go usually 8 ticks. Sometimes it won't hit 10, and then you're kind of hosed. You can go 6. But you got to be careful, because sometimes if you pull that scalp off too quick, and you can move it around too. Once it's there, once it's there and placed, if you feel that you're not going to get the 10, and sometimes it'll kind of dink around where you got in and not moving, you're nervous. It doesn't have to be 10 or 12. You can drag that puppy up a little bit and go 6 or 8. Just get it to where it's going to get filled and get that first. Ryan says he uses 8. Yeah, because 10, ES, you're going to want to only go 4 or 5. Yeah, ES, you're only going to go 4 or 5. Now, this could have been a one-and-done trade. So here you can see that the crude dropped very precipitously. If you used a combination of stealth and line 2 on your trail, you can see that you trail all the way down, and probably the close of one of these bars here got you out. Let's do some quick math. This was leg 2 of first crude oil short of the morning right here, like such. I'm not going to measure all these. I'll just measure the first one. What do we say we got filled short at 75? I think it was. So you got your 65 was your scalp. You used 10, and then you stopped out here at let's call it 40, just to have a round number. So I have to break my calculator out here. So 35 ticks on leg 2 plus 10 is 40. $450 on short trade 1 right out of the gate. Pit open on crude. Now, I'm going to ask a pop quiz question. Make sure everybody's still awake. I hear some thumping of heads hitting desks as you fall asleep. Between the stop out of this trade right here, and this is going to be a number I'm going to ask you, and over to here, I'm going to put a horizontal line on the chart over here at about 7:20 Friday morning. How many more mid-band trades are there on crude? Not including short trade 1. Not including this one. Between here and here. How many more mid-band trades are there? You don't have to call short. You don't have to say if they were long or short. You don't have to say that. Just a number, 5 seconds. Is there 10, 15, 4 seconds. How many mid-band trades after short trade 1 over to this line right here? Counting mid-band trades. Mid-band trades on crude. 3 seconds left. Type in a number. Mid-band trades on crude. 2 seconds. Render your opinion. Cast your vote as a part of the team. I know I see them. 1 second left. How many mid-band trades on crude over to the right-hand line? 1 second. Time's almost up. Counting only mid-band trades. No other types. Only mid-band trades. Time's up. Well, let's do the easy one first. As we mentioned earlier, crude is one of those exceptional instruments that around the pit open, you want to let it go either way when you take mid-band or region boxes at mid-bands, right? So here's an example here of a mid-band trade on crude. You just stopped out of the short. You retrace, you pause momentarily, and it looks to me like there was plenty of time to take this trade. Let's do some quick math on the time here. The initial bar entered the midband at 6:18, and the bar closed up outside of it at 6:22. So the market actually sat here for about 3 or 4 minutes. And when you're trading, 3 or 4 minutes is an eternity. So, especially with crude. Crude and gold do not move like the equities do, right? The equities got the algos really pumping. You got to be fast. You got to know what you're doing, and you got to get in and out fast, right? But in the case of crude, this thing sat here for a couple, 3, 4 minutes. There's plenty of time to put a box on this. And so the way it filled was up outside the box right here. Filled long. Yes, Carl, you would have boxed, just to be clear, as this box formed, since I'm remote, if I was sitting on my PC with my cursor, I would move this chart back and show how it looked at this time. But you can just see that you would have boxed this either way. Because it could, on this retracement, just as easily gone right back down and continued the downtrend, right? But it didn't do that. It could have done that. So this would have been boxed either way. Yes. Scalp trade off 10 ticks. Trail stop, trail stop, trail stop. Line 6 in stealth. And the trail is ultimately taken out somewhere right in here, depending on how tight you did it. That was a nice trade, Brian. That was. I don't think I caught that one. I don't believe I was in the room. So I missed this, and I missed this long trade to hit both the scalp and so you went all the way back up. Either one of these could have been a one and done. I'm guessing $400 or $500 each. Now, in my view, this is one trade, but it could have been boxed several different ways, and let me explain. You could have had a box on it here, which would have been filled short. If you didn't get that box, and a lot of times you'll get this with the little ABCs, you could have had another box that might have looked something like this, depending on when you start looking at this market. And it is possible that you could have boxed here. You barely get into, but you didn't get the scalp off, and that stopped out quickly. Right here. See the little head fake there? See that? The other guy said box it in the room. Okay. I believe it. Gary trades crude very actively. So, when we talked earlier before about our scalp goals on trades, does anybody remember where we want to see markets go to? So in the case of this long, let me just be clear. Where do we want to see this trade? If you box it like I have shown right here and you got filled long, where did you want to see it go? Where do we want the scalp, the minimum? Where do we want to see this push to go to, at least? Let me help you out. We just talked about this, right? Where are you going to want it to go to the previous swing at the outermost band? In the case of the long, that'd be the swing out here at the top of 8. Band 8 as a minimum. Now you get into a trade, it doesn't get even halfway there and starts to reverse in your face. What do you do? Like that. All of a sudden it starts turning negative. Your P&L gets negative real quick. What do you do? It's going to happen. If you trade, if you're trading live futures markets, this will happen to you. Occasionally it's going to happen. Excuse me. What do you do? Hit the close button. Hit the close button. Right. You just hit, boom. Flush the toilet. Panic button. Close everything. Right? Don't let this turn into a hope trade and come down and get your 12 tick full stop out. Don't do that. Please, 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 a million times, please don't do that. If the thing starts reversing you, just hit that close button. Get out of it. Normally when it comes back in the box, Akeem. That's right. So, in this case here, you're filled long. You're up a couple of ticks. All of a sudden it starts going negative, starts going back in the box. Boom, out. You're going to last a long time trading futures if you learn that you're going to occasionally get popped. It's okay. But the key is to keep the pops small, right? You don't want those pops to turn into big losing trades, right? You want to keep them, you can keep them under 5 or 8 or 10 ticks, 6 ticks, something like that. You can live through those pops because then ultimately you wind up catching 30, 40, 50 ticks runners and it more than makes it up. All right, good. Lesson learned on that. Get out, okay? And then you regroup. In this case here, you would have redrawn a box here. If that was too fast for you, you could have redrawn a box here. Now, clearly you can see by the time it reached the third box, depending on where you drew it, and when you drew it, you would have been filled short on the close of either this bar right here or this bar right here. Or in the case of box number 2, it would have been filled short on the close of this bar right here. By hook or by crook, you're short. And then, of course, you can see that you get your scalp off at the 10 ticks. And then here's your runner, and it stops out down here. 3 beautiful crude trades. You could have been done by 7:20. Each one of those looks to be 30 to 40 ticks, plus the scalps. So 1, 2, 3 times 4 times 10 is $1,200. 3 trades in the span of like an hour and 20 minutes. Just a beautiful morning on crude. I think I only caught this one, as I recall. I did not get this one. I know that. And I think I was just getting in the room as that was happening. So I don't think I got that one, but I know I got that short. Some comments from Brian coming in. Let me see. Absolutely, this can't be stressed enough. Would you box that one above or below the midband? To be honest with you, Brian, I don't remember exactly where I boxed this. I know I did get the short. I can't remember where I got filled in here, though, but I did catch it. I might have gotten in late. I might not even gotten in until here. I think Gary was already short up here somewhere. All right, before we run out of time, let's get over to ES. A lot of you wanted to see ES. I don't want to run out of time and not show one of our favorite instruments that we like to trade. We don't really have it in the room, but YM's a good proxy for it. Proxy meaning that the movement is somewhat similar. So if you watch a YM chart, you're going to notice some of them are a lot like. And to be honest with you, if you put all those equity charts next to each other, they all usually move. Now you get the divergence sometime. Like I think Russell was divergent from YM for part of Friday. Remember? I think Weimer was heading up and Russell was selling off. That's pretty rare, but it does happen. But the closest proxy that I've noticed is to how ES trades would be to look at the YM chart. Okay, ES loading. Don't look up on me. Come on. There you go. There he is, the Lion King. Yeah, he's pretty good at spotting those swings, isn't he? Yeah, you got to think about doing that for a living. Anyway. All right. No, you got to put your lines on your charts. It's really critical. It's really good. You got to do that. Okay. Tell you what, now that we're all experts in mid-band trades, spotting and taking, let's do some pop quizzes on ES. And I'm going to recreate the open in the first hour on ES, okay? And it's going to be a simple question. And you don't have to say, in this case, for the purposes of this quiz, whether you're getting long or short or taking a box either way. We're just going to type in M for mid-band trade. Is everybody ready? Here we go. Okay, remember, when you see what you perceive to be a mid-band trade, and I haven't started yet, so don't type in M yet. Here we're at 6:29, 6:28. We're literally 1 or 2 minutes from the open of ES. Are you ready to proceed? Okay, I see consensus. Yes, we're ready to go. Let me blow it up real big so the bars get super big for you. There you go, like that. Okay, let us proceed. When you see what you perceive to be a mid-band trade, you're typing in the letter N. Here we M for mid-band. Here we go. Okay, 6:29, 6:30. Market's open. ES is open for trading. 6:30, right there, right on the button. We're all in the live room together, watching the markets move. Looking for mid-band trades on ES, recreating the live market on Friday morning. Okay, there's 6:31, 6:32. Oh, Jiminy Christmas. The thing got all squirrely on me. This remote thing's tough. Hold on. I'm getting losing control of the silly thing. Oh, man. Where am I at here? Stand by 1 second, please. Okay, I got it. I got it back. I got it back. Okay. Okay, here we are. We're back. All right. 6:34. Okay, proceeding. When you see what you perceive to be a mid-band trade, you type in the letter M. Okay, now we're at 6:38, 6:39, 6:40, 6:41 on ES. We're almost at 7, 6:55, 6:54. Coming up on 7 a.m. on Friday morning. $6.57. Mid-band trades on ES. When you think you see them, you type in the letter M. $7.08, $7.09, $7.10 a.m. Pacific. $7.16, $7.19, $7.20. $7.21, $7.22, $7.23, $7.24. All right, I'm going to stop it right there. Okay, let's go back and count the mid-band trade entries on ES from the open. And so let's see how you did. Okay? Let's see if you got them all. Now, let me put a horizontal line on the chart where we began our exercise. And so when I started showing you this chart, it looked like, I believe it was 628 or 29 or something, like right here. It was looking to the left. This is what you saw when I started doing this exercise right here, okay? Most of you caught this one. Let me ask for those of you that might not have seen it. Are these bars anywhere near or on the mid-band? Yes or no? Are those bars in that box anywhere near or on the midband? The obvious answer is yes. So this was midband trade number 1. Okay, that was midband trade number 1. We'll talk about the long and the short and how we measured it. Right now, we're just going to count them. Okay, we're just going to count them, and then we'll talk about trade management in just a second. Okay, how about these bars right here? What would you say about these bars right here? Are they located on or around the midband? Those 4 bars. Okay, I'm getting a lot of yeses. The obvious answer is yes. And so this then would be midband trade number 2, right? Okay, good. Good. All right. How about these bars right here? Are these bars sitting on or around the midband? Why, yes. There's midband trade number 3, right? Good. Now, looking to the right at approximately 7:20, how about these bars right here? Yes. Good. I think you're getting it. And most of you did type in M for midband trade when you saw those bars form right there. And then, of course, at the final, at the end here, before we stop advancing the chart, these bars sitting right on the midband right here would be number 5. Now let's talk about trade management on this. So you catch the first pop on ES. Right here. So if you engulf the candles as I have shown, you would be filled long on the close of this blue bar right here. You clearly got a scalp off here. I remember I said you only want to go 4, 5, 6 ticks max on ES. So very quickly your scalp trade was taken out right here. Right? And then you trail. And if you had a tight stop at stealth or line 6, one of these bars here would have gotten your stop. So that would have been leg 2 on the opening long trade here on ES. Trade number 2, if you draw in the boxes I have shown, you were filled long here, and you only got a scalp off because it only went here to in fact, as you recall, if anybody was in the room, I was calling this out. I was saying that there were midband trades, and support was right here around, as I recall, it was 69-ish. And that I was saying that resistance was located here at 73 3/4. Anybody remember those numbers? On Friday morning, I was calling them out. I was saying it was a scalpable range. Remember? Scalpable range. Now, in the case of this range that looks like this, and you get this a lot on ES, is that you can clearly see that is what we call sideways to up. So in here, you're only taking long trades off the midband only. You're not enabling both sides of a box, because if you had drawn it this way here, you could have been possibly filled short on those bars right there, and you don't want that. 3 scalp trades right off the midband in the trading range, like such. And then, as I recall, there was some kind of news came in. The news bots glommed onto it. So everybody knows, right? There's news bots always running in markets, right? Everybody knows that. News bots are little programs that scour social media and tweets and all manner of. They're constantly in real time monitoring of all information coming in. Bloomberg feed, everything. All these news bots are running around there, right? Especially when there's like a Fed announcement or consumer confidence or unemployment numbers. News bots are constantly reading all these feeds, and sometimes they get a jump on it, right? Now, when a news event comes in and it is significant, it can result in what's called a buy or sell program running. And that's precisely what you got right here. That's what that is. This wasn't some random pop of just, if I put a volume down here, I would bet there's 50,000 contracts here easily, maybe 100,000 plus. That's a news-driven news bot right there. And then very quickly, what do the news bots do? Yeah, they take their profits. That's exactly what they do, right? Now us, we would have trailed and got out of that fourth trade long right up here, and that's what I did. That's exactly how I played that. I took some off here. I believe I had a 4 lot on. I took 2 here, and then the other 2 I dragged up and took them out here. So sideways to up. Now, before I wrap, I want to show an instance where trading the mid-band is not a good idea. Okay? If you can, stick around for just a couple more minutes here, and I want to show you a case, especially on ES, which can really be prone to how would you say, ranges where the mid-band is in the middle and it's not conducive to trading a mid-band. Let me show you an example of that if I can. Here's a good example right here. Here's a good example right here. And this happens a lot on ES. So if you're going to start trading ES, you got to be aware of this. Let me show you an example. Right here on Friday. Right at about 8:15, 8:20, you went into this funky sideways range. Now I'm going to show you something here real quick, and you got to be able to spot this real quick. Technically speaking, you're going sideways. There's no question about it. But the mid-band is what's important here. Is that notice how, and I'm going to go back and look at the other one, but notice how in this particular range, the mid-band was right in the middle of it. Can you see that? So you do not, NOT in caps, want to trade mid-band trades when the range is tight and the mid-band is located in the middle of it. Because once you get filled, there's not even enough room to get a scalp off. If you decide to trade a range like this, you have to pick a direction, long or short, and buy and sell the extremes of it. So in this case here, you're coming off of an uptrend, so you're still taking long trades, so you're buying bounces off support down here. You're not doing the mid-band box. I'm going to take that away, right? And if you choose to scalp the range, you take your profits at the top of it when it bips up here like this. Yeah, in this case here, Akeem, you're right. There are several telltale signs that as soon as you get a swing like this and a swing like this that are located and the background color changes and the mid-band stays flat, these are all breadcrumb clues that now you're going to start to be range bound for a little while here, right? Can you see them? You can, within a few minutes, you can pick this up. And what you want to do, just like I have shown right here, you want to put a line at the top, you want to put a line at the bottom, and you quickly discern that this mid-band is flat and right in the middle of it. All right. Now, if you don't like trading ranges and you're not good at trading ranges and you like mid-band in a trend, then you have to simply stay out of this altogether. Go find another market that's moving to trade, that has trades you like. In this case here, I would not box the entire mid-band. No, I would not do that in this case here, Craig. And let me show you, because I get this comment all the time. Well, now you're all comfy Saturday morning and you're in a nice armchair. You can see that it was arranged, but when it's having in real time, you can't tell. I would take exception to that. Look right here. Still an uptrend. We were already done over here because we got 4 beautiful long trades and we're finished. But this is another example right here where, you wouldn't have known until after this, it hits this swing. Still sort of sideways to up, but you can see now that this has become resistance at this line right here, which ultimately then became support on that other range over there. That happens a lot, right? You start to set up an upper range here with the deeper retracements into line. What I'm saying, just to be clear, is you're not shorting this, in my view. I stopped trading it, but looking back, what you would have still wanted to do would be to buy these support levels, not necessarily mid-bands, because you could clearly see over here immediately that support was located here. and resistance was located here. So this is pretty beefy. You're looking at 76 to 83, 8 times 4, 32 ticks. Anytime you're over 20 to 25 ticks, 30 ticks in a range, it is tradable. And like I said, if the swings are located outside of the mid-box area, I know I typed that as before I looked at this situation, that is 5. If you took 5 as I have it drawn, you might have gotten the scalp to the top of the range. See how it almost gets to the top right there? See it? And then stopped out. And then, of course, you had another long trade here, and that was a beautiful run all the way up till almost 8 o'clock. And then right here, you could have put a line. Well, technically speaking, this line you would have already had from over here, right? From these swings, you already knew that. So there's an old saying that goes way back, and most of you have heard it, of course, that support tends to become resistance. Resistance tends to become support. It's like floors in a building, right? The ceiling of level 2 is the floor of the ceiling of level 1 is the floor of level 2. So in this case here, you can see that we had a swing clearly identified right around 83.25 from here, yes? So we didn't even need to put that line in because it came right to it, right here. See it? Came right to it and bounced perfectly. Now, what I am saying, though, is come around 825, and you notice that this swing, and this is what you want to watch for on any market, is that if this was going to be the range, then would not ES have gone to here? But it didn't. They went to here. So what's that telling you? What did you know at 826 that you didn't know at 820? A lower high. So what do? You go put a line right there. So at 826, you knew that you were in a range. You knew you were in a range. That's what I'm trying to say. Now, did it stay in that range? Yeah. There's 9 o'clock. Stayed in all the way to 9 o'clock. In fact, there's 10 o'clock. Yeah, so what I'm trying to impress upon you is that if you make good, prudent use of your lines, just like Gary does in the room, you will very quickly determine, am I in a range, am I still trending? And some of you have pointed out the fact that you change into this sort of neutral color background. You're no longer green. You're no longer red. And the mid-band all the bands are flat as a pancake. Good. Okay, any final questions? I think it's time for a wrap. I did record this. We'll post it to the web server, and after it renders, usually takes for an hour, hour and a half, 2 hours. Once it's done, I will post it. I think Gary will try to get it up. You know, you might want to check in about 2 or 3 hours, especially in the subscriber area. If you're a member, you can go in there and look. I know a lot of people had to leave early. Some people came in late. I'm going to stop the recorder right now.